The European Central Bank, the US Treasury and the Bank of England have all been welcoming one piece of news coming out of Switzerland this Sunday. The UBS group has agreed to buy its embattled smaller rival Credit Suisse. Swiss regulators were forced to step in and orchestrate a deal to prevent a crisis spilling over into the wider financial system. Facing the cameras earlier, the Swiss president said an uncontrolled collapse of Credit Suisse would have triggered unknown consequences for his country and for the international financial system.
On Friday, the liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence, and that a swift and stabilizing solution was absolutely necessary. And this solution is the takeover of Credit Suisse by UBS.
For more on this story, we can speak now to Stephen Kelly. He's a senior research associate at the Yale Program on financial stability, and he joins us now from New Haven. Thank you for being with us here on France 24.
Of course.
The Swiss finance minister says this purchase was the only solution. Is that your own opinion? Could something else have been done here?
No, I think this is the right move. The biggest thing is deal certainty by Monday morning when business resumes. So to have UBS come in, stand behind Credit Suisse's balance sheet, and say, you can trade with us. These are liabilities of UBS now. Is absolutely the right stabilizing move. Much more stabilizing than trying to put more money in or trying to let the government come in and manage this thing. UBS is a solid institution, and this was the best move.
Do we have a clearer idea of actually what went wrong at the heart of Credit Suisse?
Yeah, we do. Credit Suisse has been uniquely public in its mess-ups over recent years, various scandals, various major losses that were well publicized. So the run on Credit Suisse is not a systemic run. This is not a run on the banking system, at least yet. We'll see how stabilizing this move is. But this was really a run on a bank that kept messing up and was losing money pretty consistently and naturally looked a lot riskier. So they've been in restructuring for months, and everything just kind of accelerated due to various events over the last few days. But this is a lot of idiosyncratic events that are specific to Credit Suisse, and it makes sense to bring UBS in with a lot of balance sheet strength to stand behind it.
You hinted on this earlier, but will this Swiss banking deal be enough to avoid shaking the markets further when they open, of course, this Monday?
Yeah, we'll see how markets like it in the morning. I would say one day is probably too soon to decide. The biggest thing, like I said, is can we get back to business as usual? So I think it would behoove policymakers to call up the other big banks and tell them to come out into the press and say, we like this deal. We're going to continue to do business with Credit Suisse. It's going to be business as usual on Monday. So we'll see some stock market reaction tomorrow. Who knows what news will come out in the next few hours. But over the next week or so, I'll look to see other financial institutions stepping up and more policymaker reassurances that this can be business as usual.
Can we talk about winners and losers in this deal? It's not yet clear, of course, if this deal will lead to any job losses or not.
Yeah, it seems likely that UBS will axe quite a few employees from Credit Suisse as they sort of merge their two institutions. Credit Suisse was probably a little too big for itself as it is. They were already planning on restructuring and cutting more jobs. So I'm sure merging with UBS, they'll slim down the riskier operations and cut some jobs. But again, Credit Suisse was very much out over its skis, taking too much risk. Sort of had an ugly-looking balance sheet. So it makes sense that this will pare down. But again, this is some job losses at Credit Suisse, while they may be headline-grabbing and they'll number in the thousands likely, is much better than a systemic crisis that leads to a recession where unemployment numbers in the millions of new job losses.
The US has, of course, been shaken by its own banking crisis recently. Given this Sunday's development, should Europe be starting to get worried as well? The ECB has already said that it will support Eurozone banks with loans if needed.
Yeah, I don't think there's too much need for concern. it's sort of weird to say that Credit Suisse was idiosyncratic reasons and the few banks in the U.S. were also idiosyncratic reasons. But this very much is not 2008, where you have a plague of bad assets and you don't know where they are across the whole system. Credit Suisse was blatantly mismanaged and has been going through years of a downward spiral, particularly in the last year. And the banks that had a fallout in the U.S. were really tech-focused, frothy sectors that are sort of getting washed out as the economy cools a little bit. So while the timing looks rough and the risk of systemic contagion has gone up marginally, these things look fairly contained. And again, very idiosyncratic reasons that the timing was poor for them to line up.
Okay, Stephen Kelly, thank you very much.